What is going on, everyone? Happy Monday, and welcome back to Sin City Crypto Live. My name is David. I'll be one of your co-hosts today. And today, like every day, we are coming at you from our studio here in, the weather is so nice outside, Las Vegas, Nevada, with our daily, only on the weekdays, live shows. Before we get into the content, quick disclaimer, nothing that's said on this channel should be taken as financial advice. So please, as always, do your own research. Speaking of content, today we have a very special guest joining us. Trading legend Gareth Soloway will be live with us in T-minus 28 minutes to do some TA, talk some crypto. Make sure to stick around for that. Also, MasterCard is looking to help facilitate crypto trading and some breaking news regarding a 51% attack. We'll go over all that. We'll go over that and much, much more. But before we can, I have to introduce you to your other co-host, Big Rob. What's up?
Hola! It's your boy Big Rob back in the house. Welcome to Sin City Crypto. First time checking us out. We are an entertainment-focused cryptocurrency channel where we take the old, the boring, the stale information and we package it up in a fun and sexy way. Also, here at Sin City Crypto, we don't just do live streams.
What else do we do?
We also do the deep dives. We do crypto street interviews.
That's right.
We do YouTube shorts. And we are currently and always on location, not only this location, but other locations known as conventions.
We're also wearing shorts.
I'm not wearing shorts.
I am wearing
got
shorts.
jeans. So it's a little chilly now.
Always wearing shorts.
Yeah.
It feels good.
Yeah, big day today, man. We are excited to have Gareth on. If you're not familiar with Gareth, absolutely game-changing G in the space when it comes to crypto and also traditional stocks. The man knows charts, no matter which field it is. Real quick, guys. Let's get this party going. Let's show Gareth how many people we can pull up in the chat.
That's right.
And every like here helps. So make sure you smash the like button. And we also got smash the like button in the chat as well. So speaking of chat, let's get into our roll call. All right. So today's roll call, we have first in the chat, Why You Loud? Gang!
Gang, gang.
And then we got who else we got? We got Crick Cats, West. Then we got Marky Mark. Is West new?
West, y'all.
Oh, hola! Welcome. And then we got Stereo 2. We got K Factor, Crypto Billionaire. And then we got Nordy, Sean Burns, Marky Mark, David B. We got who else? We got Crypto Meta. I think he's new as well. Hola! Welcome to City Crypto. And Crypto Epidemic. Hola! And then we got Vegas Freeballer, Big Chili Willie, XRP Marshall. Hola! A lot of holas today. We got a lot of new people in the chat.
Yeah, you're gonna hola out here.
And then, as I mentioned, we got hit the like button. We got Durman, Dice Assault, Shirley Sound, Servando, Sam, Dennis. We got who else? We got Mario D. And so for all of you, Mario D. and then Shirley, hola, and Dennis. I think that about rounds it out. Guys, if you are new here, it's your first time checking us out, make sure you drop a hello, drop an hola. We'll send some love back your way as well.
That's right.
What's up?
Go ahead.
Okay, and then we got SD in here and
Ramunas.
And then Mario D. Hola! Okay. Real quick, I'm just gonna give you all a heads up real quick. Not in my strongest attitude. I'll just put it that way. Yeah. Little upset. If you guys are fans of the show, you already know. My bird Larry, he's a big part of me. You guys in the community have known him. Got the NFT for Larry. Anyways, he's on my personal members. Anyways, he got out. He flew away. So a little upset. I'll just leave it at that. If you're wondering why, a little quiet. Cool.
It's all good, bro. We got you, my dude.
Thanks.
You know, we love Larry. Larry, we hope we can find you soon, my friend. We hope you're hanging out waiting for us to come find you. All right. So I found some interesting. So Kanye West, very polarizing figure. And if you guys missed the news, JP Morgan Chase decided to close his accounts. And so he was spotted wearing a Satoshi Nakamoto hat. And so we hear this all the time, right? Something goes wrong, censorship, whatever the case may be. people always say Bitcoin fixes that, right? And so I just thought it was interesting. One of the most polarizing figures, whether you like him or hate him, dude's got a lot of clout. And he's out here repping essentially a Bitcoin hat. And so one thing to keep in mind, guys, crypto, Bitcoin, all these altcoins, it's not always just about price. It's about people not being censored. It's about people taking control of their financial world in their own hands. Whether you agree with Kanye West or you disagree with his viewpoints, the fact of the matter is, whether he believes something is right or something is wrong, if he's not committing, crimes and whatnot, then people should be able to speak their minds and not have their financial sovereignty taken away. And so one thing to keep in mind, always think about big picture. So,
yeah, it's a lot of times it's, you get scorn. And, I had that in my own past. So I've had issues with banks. And, before I made a medium salary, and it's hard to live, or afford mortgages and all of that on your own. And so anyways, the reason I got into crypto, the reason that I was so passionate about getting this channel started was because, I got punished. I got punished for not having adequate funds in my account and then getting feed on top of that. And then the fees keep compounding. And so it was a struggle to get by in the past when it came to the legacy finance. And if you're kind of teetering on the edge of getting by and, managing your checking account and balances, they take advantage of you. And so anyways, when things like this happen, it opens your eyes. And you know what? JP Morgan, Kanye had $140 million in JP Morgan. Yeah. So let that sink in. It wasn't like they it wasn't a small account. So, they didn't agree with his viewpoints. Obviously, he's going through some marital issues. Already went through, but dude's got some issues on social media, at least in the view of the masses. And JP Morgan was like, "Nah, man, we're good. We don't line up with your vision." And so they boot him out of the system. And I'm telling you, man, I feel very one-to-one. I feel I can relate when you're just pissed off with legacy finance. And so he has turned to Bitcoin, or at least it seems to be that way. I mean, he's wearing a Satoshi hat. And so it was, first of all, the more loudspoken celebrities that get behind Bitcoin, the better.
Yes.
And so I don't know, super bullish. I think a lot of people are kind of dismissing this, just kind of like, oh, hey, that's funny, whatever, he's wearing a Satoshi. I'm telling you, this could be something huge. Should be something really huge. So,
well, you need the narrative to pick up, and you need more people to hear about Bitcoin. We want to eventually get to the point where you ask, when we go out and do our street interviews, we ask 10 random people, 8 of them will say, yeah, I've heard of Bitcoin, at least. Now the ratio is like maybe 3 people have heard about it, and maybe 1 out of those 3 people can hold a 2-minute conversation on it. But anyways, we have a lot to go over today. I'm going to kick it over to Robin.
All right.
We're going to do a quick market overview. Then we have our video from Forrest highlighting today going to be Chainlink. So, Rob, let's get right into it.
All right. So, Bitcoin is looking strong. Had a little rally this morning. Taking a look here, we are on the 7-day. A little higher than we were at the beginning of the week and throughout the week. Now, is this sustainable? I'm glad we got a TA expert
That's
on,
right.
So we can find out. Because my perception a lot of times, I move with the masses. So sometimes you got to sit back, look at the charts, take your emotions out of it. Now we got to 19.6 this morning. So really excited to see if we can hit the 20K. You can flip over it because it's been extreme resistance in the last 2 months almost. And then taking a look at the rest of the markets, we got Ethereum 1300 just over top. And crypto bubbles, we do have some big gainers today. A lot of green.
Quant is ripping, dude.
Quant is out of control, man.
I am, guys. We're gonna have Gareth do TA on Quant. I want to know, when is this thing gonna stop, and when is the next good entry point? because this thing has been on a rip. It went from like outside the top 40 to inside the top 30.
You know what the most recent kind of like vibe I got from Quant? You remember when Polygon had its rip right in the beginning of the bull market? I was like, all right, I need to find an entry point. And it just never stopped.
Yeah.
It just kept going and going. Next thing you know, it was over $1.
That's literally how it feels.
Yeah, and I was like looking at it at like 20 cents. I'm like, maybe I'm waiting for the pullback. Then I got to 40 cents. I'm going to wait for the pullback. You know, 70, 80, and then never came. Like, damn, bro. So I think perhaps we're in similar territory when it comes to Quant. Now, also Hobie Global Token is still tearing up the charts over 13%. And Crypto Fear and Greed Index at a 20, which is a little lower than most of the week. So I think people were just expecting to open up with another red day. But stock markets and overall markets have opened up pretty green. The NASDAQ with a strong day today, strong morning, over 3.39%. We had a bloody week last week when it came to legacy finance. Now, is this enough catalyst to push Bitcoin over the 20K mark? I hope so. I think it might be. We'll see. It's a strong opening. We'll see how the rest of the week plays out. Also, Bank of America, their CEO had some words to say. So, CEO Brian M. said, Bank of America's customers continue to spend freely using credit cards and other payment methods for 10% more transactions volume in September than the first half of October a year earlier. So consumer spending is up, and then not to mention consumer account balances are even higher than when they were a year ago as well. And then so people are spending more, people have more money in their bank accounts, and the consumer credit remains pristine. So late payments still well below pre-2020 averages. So Bank of America, the largest bank in the U.S. And so you can say, you could probably look at Bank of America as a gauge to what the regular market, what all the markets are doing. Most bank accounts, I'm sure, with Bank of America being the largest bank. So if majority of the bank accounts in America are they have more in their savings account, more in their checking account, they're spending more, and they have better credit. I think this is probably, now maybe this is just a PR move because the storm is coming. They're trying to like ease expectations, but I don't know. I think it feels good to me, and I think do you take the word of the CEO for Bank of America that the consumer spending and saving is on the up and up? I mean, recession realistically isn't looming, or at least we're coming out of it.
I mean, I'm assuming that these are factual numbers and not just stuff he's throwing out. But this is not, in my opinion, is not a good thing, because we're at the brink of this. Like, some people are saying we are in a recession, right? Technically, we are in a recession. Some people are saying we're not because of this. Consumer spending is still high. People still have money in their bank accounts, and the jobs market is hot. And so it's like no one can make a decision. For me, it's like, just say we're in a recession and let's figure out a way to get out of it. But it's like this, half say we're in, half say we're not. This has to happen. No, this is happening. And so we're kind of stuck in the middle. So I don't necessarily think it's a good thing. I know a lot of people, I mean, these are facts. People's credit card balances have gone up significantly. During the pandemic shutdown, people were paying their credit cards off with all the free money they got from the government. Well, not so free. And now those credit card bills are going back up because people have to supplement their income with credit cards to pay for stuff that's more expensive because of inflation. So I don't know. I'm just like, dude, just like stop slowly putting the knife in and just put it in there. Let's figure out what's wrong and let's get out of it. But anyways. Exactly.
And then one of the viewers said JP Morgan Chase is the largest bank, which they are.
Yeah, I was going to say, I thought JP Morgan
number two.
So. Yeah. But Bank of America has America in their name, so we give them a little heads up. But Anyways, all right.
They're pretty prominent here in the West Coast, especially in Vegas. I don't see much JP Morgan Chase out here. I know they're more of East Coast dominant. So yeah. Anyways, we get used to seeing Bank of America here on the West Coast.
Yeah. All right.
And then once we get to 120 viewers in the chat today, we're going to open up the club. If you're not familiar, we like to celebrate new milestones here. And so when we get extra love in the chat, we celebrate and have a dance party.
That's right. Club is coming. So is Gareth. But before we bring Gareth, if you're new to the show, we have Forrest from Crypto Stackers Pro joins us every Friday for live TA. He also highlights one coin every week, does an analysis on it. And this week, he talked about Chainlink. Let's not waste any time and get right into it. Please enjoy.
Chainlink just announced recently its Chainlink Economics 2.0, and there's three things that come with this change or this upgrade to Chainlink that I believe could make Chainlink an outperformer for the next 3 to 6 months, with a big catalyst coming up in December, if not in the next bull market. When that next bull market will be is obviously uncertain, but I do think Chainlink accumulation right now is a pretty decent play. So first, Chainlink staking. This is huge. Now you'll be able to take, there's added incentive to owning Chainlink. Not only can you win in terms of the underlying appreciation of the token, you can actually earn on those the Chainlink that you own by staking it. So a new layer of crypto economic security in the Chainlink network, where ecosystem participants can stake Link to help increase the security guarantees and user assurances of Oracle services. So Chainlink staking, this comes out in December. Let me go over here. There's early access in December. So I believe that there's going to be a pretty solid bid for Chainlink moving into December, and it may be a buy the rumor, sell the news type event. But note, we are still in mid-October, and the market lately has looked very bearish. Now, if the S&P 500 or the overall economy collapses, Chainlink will probably not be impervious to that drop. But if it doesn't, I do think that Chainlink could run up into December based on based on people wanting to buy it and stake Chainlink to start earning early before anybody else can, the people who are eligible for it. And then once broader eligibility, or once that staking contract is opened up to the public, I do think you'll see a lot of people buying Chainlink to stake it. Not only that, but staking Chainlink makes it a little bit less liquid, right? It means that the supply in exchanges is probably going to drop. The supply in people's wallets is probably going to drop. It's less available to trade. In order to trade it, you'll have to actually unstake it. So it makes it a little less liquid, which could cause some price appreciation. Next is the build program. The Chainlink, this is very, very interesting. I think this is a big, bold move and a positive move for Chainlink. They're essentially starting a hedge fund, kind of. The Chainlink Build Program is a Chainlink Labs initiative that aims to accelerate the growth of early stage and established projects within the Chainlink ecosystem by providing enhanced access to Chainlink services and technical support in exchange for commitments of fees and other incentives to Chainlink service providers such as stakers. Right? So you'll be able to stake your Chainlink, right? And then let's say a new project that is bootstrapped wants to build and launch, but they want to integrate Chainlink oracles, right? Or they want to integrate Chainlink services in some way or another, but they can't afford them. Well, what they can come in and do is they can say, oh, we'll give you 5% of our token. We'll give you a 5% token allocation in exchange for you helping us set up Chainlink and use these services while we build. Not only does that allow more applications, more projects to build on Chainlink that otherwise would not have been able to build on Chainlink, right? Thereby increasing the value of the Chainlink network. It also feeds stakers, right? It also feeds stakers with a source of income and revenue. So this is a really, really nice way that these two interplay with each other. And then the third thing is the scale program. Sustainable Chainlink access for layer 1 and 2 enablement is a Chainlink Labs initiative where blockchain projects commit to offsetting operating costs of Oracle networks to accelerate their ecosystem's growth and support the long-term sustainability of Chainlink Oracle services. So similar to the build program, there are decentralized applications or projects that are building that may not be able to afford Chainlink services. Well, let's just say you're a decentralized application building on the Avalanche network. the actual Avalanche or the Ava Labs in this case could come in and say, you know what, we'll pay for you to use Chainlink so that you can, you know, have a solid source or you can have access to Chainlink's products, right? Product offerings, decentralized oracles. This is big. And Avalanche, Moonbeam, Moonriver, and Metis have already committed. And then the last thing down here, technical innovations, a series of initiatives that enhance the functionality and economic viability of Oracle services, such as off-chain reporting, 2.0, blockchain fast lanes, data feed optimizations that balance the need to meet user demand with stronger incentives to adopt cost-efficient blockchains and layer 2 networks. So just basically general upgrades down here. But the staking, that is what could cause some serious price appreciation. So we'll go to the chart over here, and we see that on our easy bands, Chainlink is sitting at its 21-week simple moving average, but it's not all that much higher. It's only 20 to 30% higher than the lows, or it looks like 38% higher than the lows currently. So has there been better opportunities to accumulate? Yes, right. Our green easy band level were our past accumulation zones, but this is probably a fair level to accumulate at as well. Now there is risk if we get some sort of a economic downturn, a crash in the S&P 500, a crash in the rest of the market. Look for support to come in the short term in the green easy band region, which could be as low as $3.50. I still am very bullish in the long term on Chainlink, so I think that would be an excellent place to start accumulating, and that would be kind of around our previous resistance, which we exploded through in the early bull market in 2020. So even so, I do think that we could see price appreciation from here. We have visited the green easy bands. We have seen this long-term accumulation phase that is starting to drift upwards ever so slightly. So with that, what's the word? I'm blanking on it. The catalyst in December of staking, I do think that Chainlink could see some rapid price appreciation here in the next 3 to 6 months. If we get a longer term bear market or a longer term recession than what we're currently already in, then of course, it could just be until next bull market before we start to see Chainlink really take off. But Chainlink essentially has a monopoly in the decentralized Oracle space, and I am very bullish on Chainlink moving forward, and actually looking to move some funds around to potentially take a small position in Chainlink so I can stake in December. Thanks so much for tuning in. I hope this video was helpful. Peace.
All right. So, Rob, is there a safer investment than Chainlink in crypto right now? I mean,
in the Oracle space, absolutely not.
I mean, but here's the thing.
Now, you could make an argument.
What's safer than putting your money in the gold standard for oracles, which is 100% mandatory for running smart contracts?
Yeah.
Right? It's not going anywhere.
The only thing I can, here's the thing. I'm super bullish on Chainlink. They're building in the bear market in the same way that they did before. They're making partnerships. Everybody uses Chainlink. Maybe not every single chain out there, but majority of them do. And it is the gold standard. Now, the one thing I will say is that people aren't, that the average retail user isn't going on and using Chainlink, right? Mm. And so it is more or less for the blockchains, the companies that are founded the blockchains, and those are the ones that have the most utility. Not to downplay it at all, but I'm just saying that when you say the safest play, probably, but the sure bet for a big run up, come up in the next bull run, I think there are better projects.
Is there one that comes to mind?
I know, I'm just thinking of other industries. So I think the layer ones, things that are strong on the NFTs. I think NFTs in the next bull run, because I think you're going to get a lot more integration when it comes to the music side of NFTs, perhaps movies, downloadable movies. So I mean, think about you can get it instead of buying the digital movie. You ever bought a movie off of one of those streaming platforms? Yeah. And then you forget your account or whatever, you forget your login, and then you're like, oh man. Anyways, just imagine if you could just buy and purchase your movies as well. In the same way that you would rent a movie, you just buy them. Yeah. And then you have your little collection there, and then you can watch it on any of your platforms. You can watch it on your smart TV. Anyways, I think the NFT sector is gonna straight pop off next bull
And
run.
the narrative should shift from just JPEGs to much more utility. But as far as Chainlink, and I'll leave it at this because we're about to bring Gareth on. But when you throw in something like staking, that will be like, that'll be an integral part when Chainlink does go through a massive demand. Supply will have shrunk. And so now you're going to have people buying Chainlink. You're going to have all these layer 1, layer 2s, like having a lockup link to be able to use their Oracle services. And so all this combined, plus people FOMOing in, I mean, who knows? Chainlink got to over $50 in the last bull run. Where can it get to? Over $100? I think it's definitely possible.
And then real quick, before we get into it, I just want to drop some love for the new people in here. We have SDSD, Stephen Farrar, Derman, Fuzzy Crypto, G Vasquez, Gary, Jerry, Luke Trader, House Mix Play. We got Don Ragnar, and then also Anthony
Barbacoa.
And then Arsenal. Hola! Welcome to Sin City Crypto. All right. Go.
Let's not waste any time. Let's bring on the man, the myth, the legend, the god, Gareth Soloway. What's up?
Hey guys, how you doing?
Good. How you doing?
Good. I gotta love that intro. I appreciate that.
Yeah, I would have done my my announcer like Bruce Buffer, but my voice is a little raspy. People keep asking. It's just allergies. Wind kicks up around this time of year. But Gareth, thank you so much for joining us. We know you just got back from Dubai. You had your own like booth, man. I believe you were doing like live TA. How was Dubai, man? Was there anything revolutionary you saw or something that really excited you?
I mean, I'm trying to think of, there's so much, right? There was like a flying car, a hovercraft. I mean, I'm like, where do I get one of these things to be able to skip the traffic and just jump up above everyone? But there was some really cool stuff. The cool thing about the Dubai event is that the crypto side of it is just 1/10 of it. It's all about like technology, innovation, and everything else. So really, really cool. But it was fun. Yeah, we did have a little bit of a booth. I did live TA. I did some good interviews there. And, last year when I was there, I talked, Bitcoin was at 65, 69,000. And I said it was going to 20 and everyone kind of rolled their eyes. And then this year, there was no rolling of eyes here in Dubai this year.
What's the opposite of rolling eyes? That's probably what people were doing to you.
Yeah, their mouth and their ears were wide open, I don't know.
But
no, it was cool, man. By the way, Dubai is a cool city. I mean, Vegas is awesome. I love Vegas, but Dubai is a pretty nice close second. Just amazingly clean and safe, and restaurants, food, everything. I mean, it's got to be the Dubai of the Vegas of the Middle East there, minus the gambling. They're not allowed to gamble.
No gambling. Well, that's
No.
pretty sure that's probably a good thing. But anyways, Gareth, I don't want to waste any time. I know we only have you for a little bit because you are a busy man. Let's talk about macro a little bit, if you don't mind. Just in general, right? Have we seen a market bottom for the stock market? And if not, like, what's your time frame? And are we going to see just a like sharp decline, or is it going to be a steady ladder down? Like, what are your thoughts?
Yeah, so I don't think the markets have bottomed yet. The equity markets certainly have not. I think Bitcoin and crypto is closer to bottoming than the stock market, mainly because I think you have that goldish type safety play that eventually Bitcoin will turn into, right? So as the macro gets worse and worse, and people get scared of being in stocks and the economy, the idea of turning towards a Bitcoin definitely makes a lot of sense. We're not there yet, so I want people to understand that. But at some point, 12, 13,000, wherever it may be, I do think Bitcoin bottoms out and then starts to grind up. The macro is going to be a tricky thing. I really think we're in for a long period recession, mainly because the Fed can't bail us out. If we look at the past 10, 20 years, every recession or every market dip like the COVID collapse, the Fed was just printing money. Well, that was great when we have 2% inflation or less, but now we have 8%. And even if it drops to 4%, how does the Fed print us out of a recession at 4, which would cause inflation to potentially spike to 20%. So it's going to be one of these longer periods, which I think is a great opportunity for crypto overall, because you're going to see these new technologies, these other ways to kind of figure things out coming to the forefront. So I would say just prepare. People should prepare for still some more volatility, maybe another next leg lower in Bitcoin, but the buying opportunity is coming.
Now, I've said this numerous times, and I'm curious to get your take, right? I believe when people's backs are pushed up against the wall, you have to do things you don't ordinarily do, right? And so a recession hits, you're not going risk on. Gold isn't really moving, right? You can probably say other precious metals, fine. Treasuries, U.S. Treasuries, inflation's so high, right? And so where are people going to put their money? And so even if you put it into 30-year bonds, right, or treasuries, and you get 3, 4, 5%, you're still not beating inflation. And so my thing is, this could be a catalyst for a narrative switch into where people say, okay, well, what else is there? And they look at crypto and Bitcoin and say, hey, we have an asset here, a hard money asset with a limited supply, with a decentralized network. Can you see any scenario where we're in a deep recession and Bitcoin actually benefits from it?
Yeah, I absolutely do. I think for us to get to that point, number one, we need to see more maturity in the crypto sector. So we look at an asset like Bitcoin that's only 13 years old, right? So it's very young in the scheme of like the stock market. I mean, if you even looking at just Apple's been around since the 80s, so it's 40 plus year old company. So I think you need to see that. I also think you have to see regulation. I know everyone loves the decentralization aspect, but at the same time, if you're going to actually turn Bitcoin and other cryptos into like a safety haven, then you need to know the rules. I need to know the rules, right? So I'm allocating some of my capital towards crypto, but at the same time, there's no way I'm putting like a few $1 million in crypto because I don't know what the heck the government's going to do. Right. And I don't want to be caught with my pants down, if you will, in that scenario where they come out with strict rules and Bitcoin dumps out by 80%. I don't think that's going to happen. But the point is that you have fiduciary responsibilities from a hedge fund perspective, pension funds, and that's the money we need to attract to crypto. You get pension funds alone to buy in like 2% of their pension fund into Bitcoin, and you're at like 300,000 overnight, right?
Oh yeah.
So the only way that's going to happen is if we get the rules. Like, just give us the freaking rules already. Don't drag this out, because honestly, that's what's hurting crypto right now, is that we just don't know what rules we have to play by.
I agree, and especially the institutions as well.
Now we've heard a narrative switch when it comes to the CFTC regulating Bitcoin when it comes from the SCC. And do you think that the SEC might be turning a corner? I'm not sure how far your expertise is in the SEC, but do you hear any rumors of perhaps a spot Bitcoin ETF being sooner than later? Because I feel like they just keep denying all these Bitcoin applications. And we had Grayscale sue the SEC last week. And do you think we're going to make any headway in that direction with the SEC? Or
Yeah, I do. So I think that the first thing is, right, so as soon as I think the SEC will approve the ETF for spot, as soon as they lay out the groundwork. They probably won't do it ahead of time, because like imagine if they allow the ETF to come to market, you get a bunch of investors in there, and then they throw a curveball of like regulation that we didn't expect, and then everyone who just invested loses like 80% of their money or something like that. So I think they'll wait for that regulation first. And then as soon as that's in place, as soon as they kind of announce it, I think within probably like 3 to 6 months, you'll see an approved spot ETF. So I think that's exciting. That's going to give investors in stocks, like people that don't have crypto accounts, which, let's be fair, there's still a massive amount of people that don't invest in any crypto. Yeah. That's going to give them an avenue of comfort to invest. And you'll probably see like I've even envisioned a gold Bitcoin ETF, like where it kind of like there's a allocation into gold. And so, I mean, it could almost draw you into this dual safety haven, right? So you think it's the digital gold, but then you have the actual gold, and it could be kind of a cool idea too. Though there's so many opportunities out there once that spot ETF is approved.
Amen to that. Now, I'm going to keep this next question very broad. What the hell is going on in the bond market, whether in the US and the UK? And if you have charts, please feel free to show them. Yeah, I'll just leave it at that.
Yeah. All right. Yeah. So let's definitely talk about the charts, and I'll bring up my chart. Let me just bring up one of mine right now. So right now we have what's called an inverted yield curve, and basically an inverted yield curve means that this is the 2-year yield, and the 2-year yield is just under 4.5%. Now, in theory, or in reality, really, what it should be is that the longer you tie up your money, the bigger the return you should get, because you're tying up your money for a longer term period. So you need to demand a higher return. Well, right now, if you tie up your money for just 2 years, you're getting 4.5% on your money. If we go to the 10-year and you're tying up your money for 10 years, you're only getting 4%. Right. So that's what we call an inverted yield curve. And basically what that tells us is historically that signals recession. It's almost never does that happen without a recession occurring. So you have to think that the US economy and maybe global economy is heading towards a recession. Now, what we've seen going on with the UK is basically the Federal Reserve has said, we're raising interest rates, screw everyone else. Let's just keep raising by 75 basis points. And the problem is that you're starting to see breakages. So basically, if you think about it, we had the Fed funds rate was at 25 basis points like a year ago. And all of a sudden, we're at 3.25. So think about the X times. We always talk about how many times is this coin going to go up exponentially. Well, the 10-year yield, or the Fed funds rate, has gone up hundreds and hundreds of percentage points to go in a very short amount of time. And what you're seeing is that the system globally cannot handle that. Right. So again, we're seeing this breakage going on. We saw the Bank of England coming out and saying, hey, listen, we have to actually start almost like a pseudo QE again by buying bonds. And it's one of those things where the Fed, to be honest, I think the Fed is absolutely insane. You need to raise interest rates, or you should have been raising interest rates. But what I think they're doing is they're playing catch up. And it's never a good scenario to say, oh, my goodness, we were behind the curve, so now let's just pile on and crush everything. And I also think like what we have from COVID is a unique situation where you had investors or just citizens stashing money during COVID because they weren't driving to work, they weren't traveling, all these things, and they were paying down their credit card. So the consumer is remaining very resilient because they have all this money on the sidelines. At some point, that money runs out, and this economy takes a cliff dive with all these interest rate hikes from the Federal Reserve. So I think by mid next year, we're in a very tight economic situation, and it's very possible you could even see rate cuts by mid 2023, which I think could coincide with maybe the bottom in Bitcoin.
Fair enough. And I think you hit the nail literally right on the head. Is why were they not raising interest rates when they started issuing all these stimulus checks, knowing that the pent-up demand was going to destroy the supply chain? Right? They should have slowly started raising these interest rates, then got us up to the 2.5 to 3%. And then now when inflation starts getting high, you can slowly go up versus
they were in denial. They were in denial.
Yeah.
They kept saying
transitory. How many times did Jerome Powell say transitory at every press conference?
Dude, like how are these people leading our
Janet
country?
Yellen, it was Biden. Everybody was dropping this transitory thing, and it's just like they're drinking the same Kool-Aid, and it was just like, hey, look, like you.
And the thing is, like, this is what drives me nuts, right? Is that this is just the latest example of the Fed being totally wrong. You could go back to like 2009. You could go back to 2000. In 2018, they started raising rates. In late 2018, the stock market collapsed like 20%, and then they started cutting again because they didn't want to let that happen. Then you go back to 2009, literally Lehman was failing, and then they're like, okay, maybe we should do a little stimulus now to offset that. And so they're notoriously late to the party, and they just try to play catch up, and then they go too far the other way. And I have no idea why. I mean, I don't know. It's a mess, and they have never shown their ability to actually do things right, in my opinion.
You think they're going to be late to the party on easing up on the interest rate as well on the back end? Basically, say we go deep into a recession, or what do you think?
Yeah. I do. And I think what's going to happen is they're hiking rates. Number one, we have to think about it like this. So when Volcker was around, interest rates were like 12%. He hiked them to 18%. That's a big hike, 6%. But if you think about it in percentage terms, it was only a 50% raise from where we currently are, 12 to 18%. Now, if you look at where the Fed funds rate was this time, you're talking like 5, 6, 700%.
Right.
So the impact on the economy is going to be exponentially bigger than what we saw in the 80s. And I think that what we're going to see is the Fed saying, okay, we see the economy slipping into recession, but they'll be like, just like transitory, they'll be like, oh, it's going to be a mild recession. It's going to be mild. Then it's going to get so bad, and they're going to say, well, we can't lower interest rates because inflation's still like 4%. And then it's going to get worse and worse. And finally, they're going to be like, holy cow, we're in like a depression almost. Now we got to cut rates really fast, play catch up. It's going to just go around and around.
It's going to be a nightmare.
Here's one thing. I've heard multiple times that if they were to raise interest rates to say like over 5%, it would break the economy. And that it's different times now than it was before. What does a quote unquote break the economy look like? So let's just say hypothetically they got to say 7%, the Fed's fund rate, and they triggered this what people have analysts have been saying, breaking the economy. What does that look like? What is in your kind of scope breaking the economy look like?
Yeah, so I think number one, it's a deep recession, maybe close to worse than that. It would be breaking where things just start to collapse, and you have all these things that are connected. You have derivatives, you have the stock market, you have pension funds, all these things, and what you'll see is a breakdown where you start to see these failures going on in the system, where the Fed has to start plugging it. And we even know that the reverse repo market, which is the money that banks park at the Fed on a nightly basis to earn interest versus lending it out, we're literally at $1 trillion a night, a day, basically. And what that tells us is that the banks are no longer lending money, and that's showing you that we're starting to see a freezing up in the credit system. So I think all of these things are precursors to a bigger breakdown. But I mean, I think when they say breaking the economy, it is literally you're looking at a recession that we can't get out of, maybe stagflation, which is kind of the worst of all scenarios.
That's a good point. Gareth, I want to pivot to oil. Okay. Mm-hmm. So we know the U.S. administration has been releasing oil from their strategic reserves for the past few weeks, and they are below the threshold of where they need to be. And so you have OPEC came out, said they're cutting production by 2 million barrels a day. You have the U.S. who's going to stop releasing by the end of this month. I believe October 31st is the last day they will release oil. So they're going to have to replenish those reserves. So what do you think is going to happen to the price of oil, to the price of gas, when you have OPEC cutting, the U.S. government going on a buying spree, and then just people naturally needing gas and oil?
So the common theme would be that oil should go up. I actually take the opposite side. I actually think oil is going to continue to fall, not because those aren't bullish signals, right? I mean, number one, when OPEC cuts, from what I heard, they said 2 million barrels, but I heard that they were underproducing by 1.3 million already. So it really turns out to be about a 700,000 barrel cut. So it's not as drastic as it sounds, just because there's a lot of refineries that are down and have been down and so forth with capacity. But I think the key is to understand that the slowing in the economy that is taking place already is going to be so much more dramatic in terms of the reduction in demand for oil versus just the strategic reserve, needing to be replenished. So for me, I think oil's headed much lower. I see by 2023 sub $50 crude oil. And I know that's counter kind of to what everyone's thinking, but remember that if you take the global economy, and we're looking at China, we're looking at Europe, we're looking at, basically all of the countries inclusive of the US, and you just slow down growth by like 2%, you're probably like at negative 10 million barrels a day in less demand. So it should actually be okay. I'm not surprised that they released the strategic reserves. We knew that the elections were coming up, so they had to try to drive it down. But just the Fed hiking rates is slowing things down, and that'll do its job and bring oil in.
And surprising enough, they stop right when the midterm elections happen. So,
yep,
coincidence?
That's right, man.
All right, let's shift into crypto. What the hell is going on with Quant? This thing is like ripping. It's up 100% over the last, I think, 10 days. Just broke $200. Like, what is going on? When is it going to stop? What's a good entry point if you're waiting to get into Quant?
And we were having a discussion here. I was like, man, Quant feels a lot like Polygon did during the run up, where I saw it at like 15, 18 cents. It rallied up to like 30 cents, 40 cents, and I was like, oh, I'll just wait for the pullback, and it never came. It just blasted all the way up to $1. I might have taken a month or two, but yeah, it never had any significant pullback. And I'm like looking at Quant, I'm like, damn, did I miss the boat?
Can you guys give me a quick education on like what makes Quant unique? That you guys
They're essentially a software as a service. So they're a layer 0 essentially blockchain. Their founder has vast expertise in government, Federal Reserve, treasuries, and so Quant's been kind of labeled as a leader in providing the infrastructure for CBDCs. Great tokenomics, only 14.5 million tokens. So they're like the leader in this whole CBDC thing.
So could we draw the conclusion that maybe insiders know that there's going to be some announcement on some like dollar coming out, new digital dollar? I don't know. I'm just, that would be so interesting to think about that. I just drew that comparison, but I'm just a speculation on it.
Well,
I don't think there's insider trading going on. Right?
There's been a lot of building when it comes to the CBDCs. So I think they're trying to find themselves on what platforms. I think everyone thinks it's going to be a winner take all when it comes to CBDCs. I do think that in the same way that the U.S. Has multiple contracts and partnerships with private companies for all their sectors, I don't see that CBDCs are going to be any different. They're probably going to leverage 5 or 6 different blockchains when they do go down that road. And Gilbert Verdian, which is the founder of Quant, has a lot of ties when it comes to governments, also the UK government as well. Yeah. So everyone always associates CBDC with the US, but I think it looks like they might be in the running for the CBDC in Great Britain. Is kind of a buzz, and so
they also have a patented overledger technology. So, but what are the charts saying? Like, when are we going to stop? What, like, if you're looking to get into Quant, what levels should you be waiting for?
All right, let's take a look here and see what we got on these charts. Because I actually do see something that was kind of a precursor that was giving us a heads up. This might have run. And again, I don't look at a lot of these coins, but one of the things I see is an inverse head and shoulder pattern. So it's always fun to look at these. So basically what an inverse head and shoulder pattern is you have like an upside down human, right? So here's your shoulder, here was your head, here was your the rest of the head, and then this was your shoulder. And this is a classic bullish setup. And there's your breakout right above what we call the neckline. You basically take the armpit, if you will, of the inverse head and shoulders, and you connect that trend line. So once it got above here, this was the breakout. And I'll give you guys a little sneak peek at some pretty cool technicals here. You can actually analyze the head and shoulders and come up with a target. And the way you find the target is you take the low of the head and you do a vertical line to the neckline. And basically you take that distance, and that should be the explosive move to target. So if we do this here, $40 to 140, right? So 140, so it's about a $100 move from this low to the line. And then from the breakout, you should get a $100 move as well. So if we take from 125, basically, you know what the target was?
225.
225. And look at the high today. Yeah. Is that freaky or what? So just on pure technicals, this would be like, okay, this might be a short-term top. And by the way, this just gives you a target in the near term. It doesn't mean this isn't going to go higher in 3 months from now or 6 months. I mean, it could go to 1,000, whatever. But just fascinating how a calculation like that can give you that target, and there it is. So yeah, so it looks like, to me, I would be like, if I was in this, I'd probably be taking at least half off the table, playing it conservatively. And then you can always rebuy that on a retrace. And I'll show you one more thing here on the chart. Yeah. So where would I buy this, right? So let's say, all right, target's been achieved with the head and shoulders. The place I would buy this is what we call a retrace to the scene of the crime, which would be back to this trend line. So basically, this was your breakout, the scene of the crime, as we refer to it. So usually after the breakout, when it consolidates, it finds its way back to that line. So you'd be a buyer around 120 to 125 on a retrace.
So 120 to 125. The scene of the crime, I like that. That's the beauty of TA, right? You just look at numbers and probabilities and you take emotion out of it. And so,
Yeah.
yeah, Quant is something that I know me and Robin really like. I know our team likes as well. It's just like, you don't want to get on a train that's going 100 miles an hour. You want to wait for it to get to the next stop. And so we were curious when the next stop was. All right.
Yeah, and I would just say, just in general technical trading, you never want to chase, right? So just like when Bitcoin was at 65, 69,000, anyone who got in there got hammered. Same thing with this. You look at this and going back to early September, it was at like $80. You never want to be that person that's paying, like 100, 220 or 225 for it. I always liken it like in investing, people need to kind of think like as if they're shopping at the mall. And what I mean by that is like if you go to the mall and you're like, oh, I love these jeans. Last week they were on sale for like $100. This week they're on sale for $500. You don't say, oh my God, let me go buy these $500 pair of jeans, right? We say, nah, like that's ridiculous. I'll wait till it's on sale again. Treat crypto, treat stocks, treat commodities the same way. Wait for them to come back in because they always do.
Amen to that. And don't get greedy.
Yeah.
All right. I want to pivot to Chainlink, okay? The gold standard for oracles. What every single smart contract needs, essentially, is an oracle to feed in real-world data in real time. Now, Chainlink is coming out. They changed their tokenomics, so they're introducing staking, which will take supply away from the active traders. Now, what are the charts saying on Chainlink? Has it bottomed, in your opinion? And what are some levels you're looking at, whether if it's you're already in, looking to take profit, or waiting to get in, or should you just get in now?
Yeah, let's take a look at the chart here. So basically on the chart, we've seen that just like Bitcoin, well, this actually bottomed earlier than Bitcoin. This bottomed back in May versus Bitcoin's low was in June. But it looks to me like you have some sort of channel here. So let me get my parallel channel and draw a line in here. We'll connect these lows, and then we can kind of drag it up here. And it looks to me like you're trading inside of this range. As long as this lower trend line holds, I think Chainlink is okay. It could go to the high end of the range around $10. But just if you're in this or if you're looking to get in, just be careful you're not a buyer if it breaks. If it breaks, that would be the signal to stay away from it. Now, let's be clear on this. This pattern formation, just like Bitcoin, unfortunately, if you put a trend line here, this big drop with all this sideways chop, this is a macro bear flag or in spirit of bear flag. So it tells me at some point it's going to break lower. But in the near term, it still could pop to the high end of the range before coming back in. So I would say near term bullish since it's on support, but just be careful over the next 3-6 months as it could easily break down.
Amazing. All right, what's Bitcoin looking like? I know the Bollinger Bands started kind of getting a little tighter, which typically, precludes a big move coming. What's your kind of like by the end of October outlook on Bitcoin and maybe through the end of the year going into next year?
Yeah, because we've been in this, I'm looking at my charts here. We've been in this 20K zone since August. And so we've broken below a couple times, above a couple times, but we've just keep sticking to this 20K mark. And it's
Isn't it amazing
one
how
week, 1 week it's support and the next week it's resistance, but yeah.
Crazy. Like who would have thought that Bitcoin would be less volatile than the stock market, right? I mean, that's really what it is though. But looking quickly at the charts, there's a level I'm watching for a potential near-term breakout. Now, let's not fool ourselves. The bigger pattern is still bearish. So you have the big drop and the same kind of thing as Chainlink going on. But look at this trend line from this pivot to this pivot high to this pivot high right down. And look at how Bitcoin's trying to break out. If it can break above this, I think you get a short-term short squeeze where this could at least see 22.5, maybe even 25,000. So again, that's kind of how I'm favoring. I think there's a lot of bearishness because of how dead Bitcoin has been. And I think you might get some sort of breakout here in the near term. I don't think it's a long-term breakout. I still think the longer term, you're still stuck inside of this longer-term range, which is bearish. But it doesn't mean as a trader, I can't make money in the near term on the long side if we get a breakout. So short term would be neutral to bullish, I would say. Longer term, over the next couple months into year end, I'd be worried that by year end it starts breaking lower again.
And you've come out and said 12K is in the cards. Is that still your target price for, let's say, a bottom, or are you kind of moving that around?
Yeah, so I mean, at this stage, I think that's my high end. I hate that
wow.
everyone is saying it now, right? I mean,
Yeah.
it's one of those things where we all know when everyone starts talking about a level, that's where it's like, okay, well, it's either not going to get there or it's going to go below that level. So I still think, I've been racking my brain and I'm like, okay, well, if the stock market still has like 30% downside, which I think it does, how does Bitcoin not at least go down 30% or more, right? So it's a tricky scenario here. I would love to see that pivot on Bitcoin where it starts to go up when the stock market goes down, but it doesn't seem quite yet to have that maturity of Bitcoin at this point.
Just my own personal sentiment, charts aside, I just had this feeling that with the midterm coming up, it seems like the entire market, S&P 500, legacy finance, also crypto, probably due for a bounce. And then, I don't know, I just think a bounce in the cards and then a further pullback afterwards, psych out. I don't know, that's just kind of what I'm kind of feeling. I'm not sure.
Honestly, I think that makes a lot of sense. And it's important for us as traders and investors to kind of think about these things logically. Just like, the months going into the midterms, it didn't make sense for oil to still be at 120. There's no way it was going to stay up there going into midterms when you got to get votes. Same thing with the stock market. You can't have the stock market dropping another 10% in the next 2 weeks going into the midterms. People aren't going to be happy about that, right? So it makes sense that maybe we get a short-term bounce, which then should benefit crypto as well, going into the midterms. Then once the midterms are over, then whatever, I guess.
All bets are off, huh?
Yeah.
Gareth, are you familiar with the Mango Market, that little hack they had where hacker came away with $110 million?
I think I've heard of it, but I do not know details about it. But you guys, I'd love to know more about it.
Yeah, so it was a DeFi protocol on Solana. So apparently they found this trading group and they doxed themselves on Twitter, which, by the way, let me just go ahead and show that right now. And so they're talking about this thing, and I'm going to go to my laptop here. So this is the guy right here, Avraham Eisenberg. He said he was involved with a team that operated a highly profitable trading strategy last week. I believe all of our actions were legal open market actions using the protocol as designed, even if the development team did not fully anticipate all the consequences of setting parameters the way they are. Now,
so just to give you just a little bit more insight, you had they had a DEX, so decentralized exchange that runs off of smart contracts, and the Oracle service that was used there got exploited. Basically, it was whale manipulation. They basically took out different positions, and it artificially inflated or inflated the price for a very short-term window, which then he put it in positions. Anyways,
and they used that fake inflated amount to leverage and borrow Solana tokens and
just basically
Bitcoin.
He just pulled all liquidity from the platform. And so at first it was this, hey, don't prosecute me, and we will return some of the funds. And now he's just basically saying, hey, this was fair game. I just played by the markets. I know in legacy finance you have manipulation laws in place where you can, essentially serve time for doing this exact scenario. Am I right on that? And it's kind of what's your overall thoughts about this happening in crypto markets? Do you see more of it, or do you see kind of regulation coming for this?
Yeah, so I mean, you're right. In the equities market, stock market, there's definitely that's a big no-no. You can go to jail for sure doing. And we know it as pump and dumps, which happen in any asset class potentially. But it sounds to me like, I'd have to know more about the inner workings. But if he was playing by the rules and there aren't strict rules about it, maybe he can get away with. My guess is he talked to lawyers, right? And they probably looked at it and said, because if initially he was saying, oh, I'll give some of the funds back, and now all of a sudden he's like, no, he probably talked to some legal experts, and they're like, dude, you did nothing wrong here. Now, does that mean that in the future there needs to be regulation so this stuff doesn't happen? Probably, right? So it's another example of something going on where we just need a book of rules where people don't get burned. Because I think that's the biggest thing, right? With crypto, it's like it's the Wild West, and that the average person that doesn't know anything, those are the people that end up getting burned, and it's not fair to them when, you could say, oh, let's screw them, they should have known. But, you just need these rules to make people feel more comfortable, especially if you want, the mom and pops to invest in crypto and kind of make this a longer lasting thing.
Okay. That's great insight. And I don't know, maybe we'll see some of that regulation coming to crypto. But
the dude also walked away with over $100 million, so I'm sure he had budget to afford a lawyer.
He only kept a certain amount.
Yeah.
He only kept a certain amount. But the fact that he's saying, "Hey, this is legal. This is on you,"
A little concerning, too,
right?
yeah.
This you built this thing. I just used it. That's like Donald Trump saying, "Yeah, I declared bankruptcy 7 times, but these are the rules. I played by the rules." And so, an ethical no, but hey, what are you going to do legally? All right. Gareth,
when $100 million is on the line, ethics sometimes goes out the window.
Yeah, no crap, right? All right, Gareth, before we let you go, can you take a look at ETH? I've been saying, and I've been following ETH on the daily. I've been saying that ETH has been in this massive bull flag. The Bollinger Bands are kind of getting tight, and I've said there's going to be a big move coming for ETH. Are you seeing similar things on the chart? Are you seeing something different? What's your outlook? What are the charts saying?
Yeah, so it looks to me, and let's bring up the chart here of ETH, is that you're basically in what we would refer to as a wedge pattern, right? So you have this line here sloping down, then this one connecting the recent lows, and you're hovering right on support. So for me, it's one of those scenarios where, kind of like a couple of the other ones we looked at, is that as long as it holds this line, you look to attack this area here, and if it can break out, then you start heading up to the next resistance, which is a line from the all-time high on ETH down to this secondary high, which looks to me to be around 1750 or so up here. So to me, there's no definitive like this is going to bust out here. Since I'm bullish on Bitcoin, I would say that I'm slightly bullish on ETH as well, just because they tend to move together. But really what we need to see is this line broken here, which would be your short-term resistance, and then you can get that pop to, basically 1750 or so.
Now, if it does break that lower trend line, where do you think the stop market, where do you think how far down do you think it's going to go? If you had a confirmed breakout on there.
So if it breaks here and starts to kind of go lower, you got to be looking at back to that sub $1,000 level. And again, no one wants to see it there, but if once you break this line, there's really not much support until you get down to these lows and then this low right down here. So yeah, you're looking right around $1,000 if it busts down there.
Now, Gareth, I know you, and I believe this is still true. I know you have crypto that you just trade in and out of. I also believe you have crypto that you hold on to, correct?
Yes. So just like any trader or any investor or any person that's been through the ringer many times in trading, like myself, and investing, I'm a big believer in trading it, but also that if you have a bigger thesis, then you want to be invested for a longer period. So basically what I didn't buy, I was all out of Bitcoin aside from trading it until we got below 20,000. Once we got below 20,000, when we hit 19, even though I think it's going to 12, 13, maybe even sub, I decided to take a chunk of money, let's call it, I don't know, like $300,000, and I took it, I divided it into 1/6 amounts, and I put 1/6 of that to work at 19. And then the idea is that as it drops every 3,000 or so, I'm just going to add another 1/6 and kind of be very robotic as an investor to dollar cost average in. Because again, for all I know, it's bottoming here. I mean, again, the charts say right now that probabilities favor a move down, but I could be wrong. And I don't want to miss the train on the upside as well. So I love the long-term thesis on Bitcoin and crypto. So I'm just kind of inching in here. If it drops to 16, I'll add more. If it drops to 13, I'll add more, 10, 7, etc., all the way down. So yes, I'm a big believer. Don't ever have a hard line in the sand because you might be wrong. If you like something enough for the long term and you think you're going to go to 100, 500,000, don't be a stickler over a few $1,000.
Fair enough, right? What does Kathy Wood say? Don't try to time the market. Have time in the market, right?
Exactly. I call it my shotgun effect. So like, you fire a gun, it's one bullet at one target. If you do a shotgun, you're just kind of spreading out those pellets and likely, as long as you're getting in the general range, your dollar cost average in.
There you go. Aim for the center mass, right?
Yep.
All right, Gareth, before we let you go, Robin, you know what's coming. A very important question, Gareth. What are your thoughts on barbecue chicken pizza? Are you for or against?
Well, I like barbecue chicken pizza, man.
My man. You know, I get so much hate. So our producer, Rocco, he's straight from Italy, right? Italy's known for their pizzas. We were visiting BitBoy in Atlanta.
It's not
and
like
I ordered a barbecue chicken pizza, and this man gave me the Joe Pesci look, like he was getting ready to grab some floss and strangle me.
I like how you said Italy's known for pizza. Like, breaking news, everybody. I know y'all thought it was associated with Mexico, but
Dude, I'll tell you guys a quick story, like 2-second story.
Yeah, please.
So I'm from New York originally, from Long Island, so I'm used to all that great pizza and all that stuff. And I've lived in Florida now for a while, in Oregon for a while as well. And I went back to meet a client in New York for the first time in years, and I legit like spent like $100 on myself at a pizza place. And then by the end, I was it was so good, but I ate so much that I was
Damn,
like legit sick.
What'd you order?
I just
$100
couldn't
in a
deal. I
pizza
was like, I
place?
needed it.
It's a good move. I like
Like
that.
I was in the gym for 2 weeks straight after.
That's right.
Gareth, you are the man. Can you tell everyone, if they want more Gareth Soloway, where can they find you?
Yes, absolutely. On Twitter at Gareth Soloway. You see In the Money Stocks. If you're into stocks and technicals, that's where you find me there. I have Verified Investing Crypto, which is just cryptocurrencies and daily video trading. And then my latest project is Verified Investing Education, which is basically analyzing charts, learn everything I've spent 20 years screwing up to learn up to this point, how to trade profitably and kind of analyze charts, the mindset of a trader, how to be disciplined, all the things that you have there. That's in a 3-course series called The Winning Trader at Verified Investing Education.
Amazing. And we do have the link to Gareth's website in the description of this video. Go show him support. Gareth's been in the game for a long, long time. Gareth, we thank you so much. We appreciate your time and expertise, and we hope to bring you on our show once again. And today was a very special day. You were a part of it. We hit all-time high on viewership here at Sin City Crypto.
Nice.
So thank you, my friend.
Like,
We
glad to
will-
be a
we'll
part of
see
that.
you. We'll see you on Around the Blockchain.
Yes.
We're on there as well today.
Heck yeah, man. Again, thank you guys for having me on. It's been a true pleasure.
Gareth, it's all our pleasure, my friend. Enjoy the rest of your day, and we'll see you soon. Take care.
Thank you.
Bye-bye.
All right. Damn, so good. I love bringing TA people on, especially Gareth, man. I'm a TA. I'm a TA fanatic, man. I'm a TA fanatic. All right, we have a little bit of breaking news. By the way, those of you that are new to our community, welcome. Drop a hello. We'd love to personally welcome you with an hola.
Also, we got some super chats. We got Crypto Muscle dropping a $10 super chat. We have Jimmy with 10 gifted memberships, and then also Broke Yoshi with 5 gifted memberships. Thanks a lot for the love, guys.
That's right.
And then
Is it time?
yeah, man. Let's without further ado, let's
What do we do here, Rob? We got
we cracked 200 viewers today.
What do we do here?
Thanks to Gareth, by the way. And so, if you're new here and you don't know what the hell we're doing, Vegas is known for a couple things. One, a badass cryptocurrency live TV show airing Monday through Friday. Also, we got pretty good nightclubs. And what do they do good in nightclubs? They party, they dance, they have, they celebrate. And you come to Vegas to celebrate bachelor parties. We come to Vegas to celebrate new milestones. 200 people in the chat. Let's go. There goes all the viewers falling
Blew
off.
out blew out the mic, baby.
Everybody's like, yeah,
We are
I'm done here.
an entertainment-focused cryptocurrency channel where we take the old, boring, and stale information. We like to have fun and bring you amazing content and amazing guests. Right. Open up the club. Also, new members, welcome. All right. Breaking news. 51% attack on Bitcoin. Satoshi value. Craig writes, BSV. Blinded by a 51% attack, a single Bitcoin Satoshi Vision miner has been found to contribute 80% of the network's hash rate. The Bitcoin Association has called for this miner to be blocked by nodes and exchanges. And then according to on-chain data, the miner has amassed over 9,000 BSV tokens since September 9th of 2022. This is every blockchain's worst nightmare. A 51% attack, essentially taking over the network, letting through whatever transactions they want, duplicate transactions, fake transactions. Is there any coming back from this? I know BSV is not really a big project, doesn't have a lot of utility, right? I mean, we both agree it's not something we would ever invest in, right, Robin?
I got no interest in
There
it.
you go. What are what are your initial thoughts? Does this thing have any chance of coming back?
Well, here's the thing. No, it's not broke. Like,
I mean,
no, here. Okay, so where I'm getting at is with the 51% attack, you can pretty much print whatever. You can change the rules of the game. You're pretty much in control of the chain. And so, as of right now, from what, unless you read it, something I didn't, they didn't change anything yet, right?
no, the Bitcoin Foundation just came out and said, hey, block the nodes and exchanges, or called for this miner to be blocked. So it's funny, like, you know, decentralized, but time and time again, hacks happen, something happens, and you have a central authority, a central enterprise stepping in and saying, shut it down, or we're shutting it down, or we already shut it down. So, yeah, I know a lot of people, it's Unami said, don't care. I don't really care either, but, you know, 51% attack, again.
Yeah, I'm just curious, because if you have control of the network, and maybe they did it inadvertently. Well, I'm sure they knew, but maybe they
Hell no,
they
they
didn't
didn't
have
do it
any.
inadvertently, bro.
Here's
Come
the thing:
on.
maybe they just wanted to earn as much rewards as possible, and they just kept throwing money at it. And then at some point, they were like,
Oh, wow, I have a 51% ownership of the network.
yeah, that's hard to believe."
Guys, that's
But they
why-
haven't done anything yet.
Yeah.
So.
And, you know, that is the biggest threat to proof of work is 51% attacks. And so just be careful what you put your money in. I can't see anyone. I mean, I don't know why anyone would hold any BSV. If you do, I'm not trying to throw shade at you, but there's like so many good projects out there. What the hell are you doing? All right. Guys, remember, smash the like button. We have a very good like to watch ratio here. And we like to keep that the same. So if you like the content you're seeing so far, and you like guests like Gareth Soloway, make sure to hit the like button. All right. Also, come support Sin City Crypto today, live at 2 p.m. Pacific Standard Time on Around the Blockchain, BitBoy Crypto. Make sure to join us. All right. MasterCard will be offering crypto access. This is sourced from Crypto Slate. The program they're rolling out with will offer a turnkey solution for banks to meet the crypto trading demands of customers. MasterCard will leverage the Paxos trading platform to execute trades. This is a direct quote from an executive member at MasterCard. Quote, "There's a lot of consumers out there that are really interested in this and intrigued by crypto, but would feel a lot more confident if those services were offered by their financial institutions." So this isn't just, hey, we're MasterCard. We're just going to allow you to use our card to buy crypto on an exchange. No, it's we are facilitating and executing, helping in the trades. And what are your initial thoughts? I mean, MasterCard is second only to Visa when it comes to the payment processing space. So is this huge news? Is this okay news, or is whatever? Rob?
Somewhere in between the huge news and okay news. Obviously, MasterCard seems to be at the forefront when it comes to the big credit card companies that has adoption in crypto. They have a lot of crypto partnerships already, and you know, maybe they're identifying crypto as what it is, an emerging technology that's going to be disruptive, that it's going to have massive adoption, and they're trying to lay the groundwork now. So facilitating crypto trades through banks, it seems to be their kind of goal versus, you know, trying to open up their own exchange.
Right.
So
Yeah, I don't know why they would do that.
No. But so it seems like they're using their network, their liquidity to assist banks into offering crypto services, which I think is an integral part to mass adoption. Because yes, the crypto degens don't care to use the banks. I don't personally, but there is, I would say, more people that will be in crypto that are not interested in going to a third party, say an exchange, using third party wallets. People would just like just the ease of use, just to walk into a bank or open up a bank app and then say, hey, let me buy some crypto and store it in the same place that also stores my checking account, my savings account. And when you check your account, you have checking account, savings account, and then Bitcoin, maybe Ethereum. I think that would be kind of cool, right?
Yeah.
I mean, not for like I said, not interested in myself, but I know that friends and family that aren't degened into crypto probably have more likely to get a exposure to it if it was something that was on a platform they already use.
So you kind of answered my question. I was going to ask you, do you agree with them saying that consumers feel more comfortable if this is facilitated through their banks versus either setting up a cold storage wallet or going into a crypto exchange?
Yeah.
Right. Okay. Yeah. I agree. Guys, for those of us that have been in the space that understand how to navigate through these dApps and wallets and exchanges and ledger, we don't need the banks. We don't need them to custody our own crypto. We're going to do it ourselves. But if we want the mass retail adoption of Bitcoin, of crypto, we need stuff like this. We need people to be able to open up their Chase mobile banking app and see their checking, their savings, their investment, their 401k, and then also their crypto. I mean, you want to streamline everything, make it as easy as possible. People, I mean, me personally, when I set up a new wallet and I have to write down the seed phrase, I take multiple precautions and I still get nervous. What if I lose it? What if my kid takes it? So imagine me who's, an expert in the space that understands it, that's been in it for a while, versus someone who's brand new, maybe a month in, is like, hey, you should get a ledger, and then you got to write down the seed phrase and then make sure you don't lose it. And then it's daunting. And so we need stuff like this to happen. We need banks to start custodying crypto for the retail investors who don't care or don't have time or don't want to learn how to custody their own crypto. There's nothing wrong with it. But us who understand and can navigate our way through it, we're going to continue to custody our own crypto.
And then one last thing. Today, I'm going to go out look for Larry. So, David, it's going to be on Around the Blockchain.
ATB, you got a pretty impressive streak, my friend. And I'm going to try to make you proud. But I don't know if... I don't talk for as long as you do. I don't ramble, but we'll see.
That's the key to success in that game is to the ramble. I took a note.
Which is your number one strong suit, my friend.
There you go.
All right. I think one or two more things I want to talk about. So this one's a little interesting, Rob. KYC to stake your ETH coming. This source from Cointelegraph. U.S. regulators may intend to oblige node validators under their jurisdiction to implement know your customer and anti-money laundering procedures for validating transactions. The SEC claims ETH, and they've said this weeks ago, the SEC has said ETH transactions fall under U.S. jurisdiction because of the high concentration of nodes are in the U.S., which would mean that FinCEN, which is the regulatory authority, will require all businesses operating on the Ethereum blockchain to comply with KYC and AML requirements. Is this gonna kill the whole idea of decentralized finance?
BS, bro. I mean, think about all the Canadian and Mexican companies that probably use Amazon Web Service that is based out of the U.S.
Right?
Are they a U.S.? Do they fall under U.S. regulation? Like, seriously. Like, I don't have the numbers or facts in front of me, but I know networking. I know that I know a little bit of Amazon Web Services, and I'm gonna tell you, I'm sure there's plenty of companies that facilitate online transactions similar to like Amazon, where you're doing a lot of business over the web. And they're based out of Canada, and their servers they're plugging into are in the U.S. Are they a U.S. based company? Can we collect taxes off them? No. It's the same with Ethereum, man. Like, stop it.
Like, is this like if this happens, right? And anyone that wants to validate has to do KYC and the AML thing. Is this essentially like, I mean, we're talking about Ethereum, the number one layer one for DeFi and smart contracts.
Who's gonna mandate the KYC?
FinCEN.
No, but
The
what I'm saying is like who is like what are they gonna put in an EIP to automatically request
KYC?
for KYC? Like it's absurd. At this point, it makes no sense. It'd be like trying to KYC Bitcoin.
Right.
Like how could you go through the process of KYCing a Bitcoin wallet? You can't. The same thing. It's not as decentralized. I get it. Bitcoin's been running for longer, but it's the same premise here. How are you supposed to KYC an Ethereum address? Like, let's be real.
They'll find a way.
And no, they won't find a way.
The government
They'll find an attempt that'll be laughed down. In the same way that people have tried to ban Bitcoin, it's not possible.
Here's a little bit of I don't want to say scary, but now over 51% of node validators are on the whole censorship program, right? Where OFAC came out and said anything related to Tornado Cash, any wallet addresses, don't validate their transactions, don't interoperate with them. So now those nodes who are doing that, who are complying, are over 51%. A little worrisome. Is there a solution for this? I don't know. But the whole idea of DeFi and decentralized finance is at a crossroads right now. And you got every regulator, every body of government trying to dip their hands in the regulation pot, trying to regulate something that was not meant to be regulated the way they want to regulate it. The whole idea, decentralized finance, right? There's no central authority ruling over it. There's no one to shut the network off and sanction people. That's the whole point, right? But who knows? Who knows what we're going to see? But what you guys got to understand, and the beauty of crypto, right? And this should excite you being in the market, is it's not just tied to one country, one government, one set of rules or regulations. It is global. It is borderless. It does not care. So unless you completely turn the internet off, crypto will continue to live on. Whether the US decides to ban it or not, yes, it would have an effect on it in the short term, but there's over 250 other countries that are looking to adopt this burgeoning technology and what crypto can do in the future. So, all right, that'll do it for our show today. Big thank you to the God, Gareth Soloway. If you enjoy TA, we do feature Forrest from Crypto Stackers Pro on our show every Friday. He's the former head of research at Token Metrics. He does join us every Friday to do some live TA, and we definitely are looking forward to bringing Gareth back on. Also, make sure to check out our socials. We're on Twitter, TikTok, Instagram. Also, join our community ran Discord. If you want to buy some Sin City merch or just crypto merch in general, visit our merch store. All the links to everything I just talked about were in the description of this video. Rob, anything else you want to talk about, my friend? That's it. Rocco? Friends, family, friends of family, and family of friends, we thank you so much for opening your week, beginning your week with us here at Sin City Crypto. If you're new here, welcome to the best crypto community in all of the crypto communities. We hope you'll come back tomorrow morning, 10:30 a.m. Pacific Standard Time. Until then, you guys, on behalf of myself, Big Rob, the Don, and Kyler Murray, we love you. We'll see you tomorrow. Peace.